Hey everyone, it's Nick with Us versus Herd. If it's your first time here, hit the subscribe button. If you want to get alerts for when we go live, hit the bell button. We go live 30 minutes after market close. If you're not yet a member of our free option trading group, we have the link below for that as well. And we actually just launched a Discord. So if you're interested in joining Discord, in just a couple days, we're up almost to 150 members, which is pretty crazy. You know, not really much promotion, but we're getting things going here. If you're here right now, say what up. If you made money today, comment got paid. If you lost money today, comment learned a lesson. Excellent, Billy FC. Richard, before the stream, Richard Easy, thank you for the $20 dono. I really appreciate it. Thank you, guys. Linda's here. Oliver, Ray Lee, what's going on, Ice Cooler? Jeff, Shotgun, nice to see you. Keith Mentor. Your slate would think I missed something. Josh, lesson learned. Billy got paid and learned a lesson. Eric, I know. Easy got paid today. Linda was saying she was reddish, I believe. Semi-reddish. Oh, semi-reddish green. So like break even. Tobin, what up? Kilgore Flux, GE paid you twice. John, nice. Oliver got paid. Nice. Yeah, so Carmine made it. So Matthew learned a lesson. Oh yeah, Richard got paid. He was posting some nice returns in the Discord this morning. I see you, Richard. Or is it Snake, aka Richard, aka Snake Diddy, aka number one. Steve, what's going on, man? Come on in. Samuel in the red by $90. Not much, could have been worse. What up, everyone? Yeah, so today was kind of crazy. The S&Ps closed up by 22 cents, as you can see right here, up 0.01%. Back to break even on the day. They're just playing games now. We had the gap up, then we had it kind of hitting a wall here around 25.70, and we had the lunchtime mid-afternoon just drop, and then there was a lot of drama today just to end up back to where we started on close yesterday. So that was pretty great. Anyone want to send me to the Lyft parking lot? What? Do I think that interest rates are going to change? I think the market was expecting them to raise interest rates. Everyone's expecting it. If they don't raise it, I think that'll be very surprising. And I think that if they don't raise the rates, now this is just speculative. So if they don't raise the rates, in my opinion, if they don't raise them, I believe it will gap up, but probably sell off pretty hard. Anytime we get good news, it gets sold off. But however, the news that we've been getting lately is like very flaky. Like the news, Trump and U.S. may have a deal. A deal is hopeful, and that's like the worst. That's like the worst news you could really have, is like when you see headlines from CNBC saying, we hope for this, or we hope for that, or they hope for that. Like, it means nothing happened. You're just putting out articles just to put out articles because it's a slow content day. You got nothing to report. You got nothing. It's just ridiculous. So if you guys remember, yesterday I wiped my slate clean, kind of realigned my portfolio. Today I started putting positions back on, and I closed down on the day by 104 per account. As you can see, I only put on positions here. I put on 4 new positions today, which I will walk you through. And wow, that was crazy. So I'm looking at here, the S&Ps closed flat, and the futures are already down 22 points. Dow's already down 100. That's pretty crazy. So not having that. So back to the lows if we're looking at now. So basically, if you're looking at this chart here, this is the ES/ES S&P futures. We're back. If you're comparing the charts to the S&Ps, the SPX, we're back here, right back at the lows here. Actually lower than that. You know, we hit lower than when we did about an hour ago. That's pretty crazy. Just watching that now. Sorry, getting distracted because I'm just seeing these numbers kind of rip down. So even though we closed flat, looks like it wants. There's more to give. Matthew, the Fed's gonna release it tomorrow, I believe. Yeah, excellent. I love these markets. Reminds me of a Bitcoin bear market, just shorting every bounce and overbought indicators. Yeah, I guess the only thing is Bitcoin's more like straight down. You know, for us it's, you know, we had two-sided action until we finally broke down lower. To kind of go through my trades here. So yesterday I closed out all my positions that were flat, either small winners, small losers, or very flat. So because I was in a lot of retail stocks. I know a lot of you guys weren't here yesterday. There were a lot of people on the stream yesterday, but I feel like a lot of the regular people weren't here. We had a lot of people, but I don't think some of you guys were here. So kind of give you some context if you don't want to watch the stream from yesterday. Yesterday, you know, I took off. I was really heavy on retail stocks. I didn't really like what my portfolio, how it was positioned, and I didn't really like. I just didn't really like the positions overall, and I was. You know, the market was down a lot at open, and the positions weren't really up that much, which usually means I overpaid for premium. So I really took those positions off, and then I didn't put anything else on. And then today I started to build back up. When I started today, all I had was USO, the IBM, which is a full loser, and I had Bank of America. Those were my only trades that I had on. I added AMD, I added BABA, I added another trade on IBM, and I added Microsoft. And as you can see today, like my biggest losers today were USO, obviously, because I have calls on that, which are now flushed down the toilet because that finally broke way below $50 a barrel, and now we're, you know, where we are. USO is below 10. You know, next stop is around 750 area. Which I think it hit back in 2016 or 2015. I posted the chart on Discord. And Shotgun, thank you very much, man. Appreciate it. Appreciate it. Fed's going to be tomorrow, 1 p.m. Central, 2 p.m. Eastern. Thanks, Jeff. So my biggest losers, USO, Alibaba, which we had a bit of a crush there. And Microsoft and IBM and BABA, I had bullish skewed positions on. So I had the 100 put, 105 call on Microsoft. And what I was looking at Microsoft, and the reason why I lean bullish, you know, despite like the news and the events, you know, really we're sitting right here where it's bounced pretty well in the past. So even though like news is negative, markets are negative, you know, what I'm thinking is there's a good chance that it'll bounce here. If it doesn't bounce here, it's easily going to get flushed to 100, and that's why I bought the 100 put to kind of protect myself. If it goes to like 99, 98, like as we saw back here, last time it broke down below like 102, it went all the way down to like 99 area. You know, so if we get a nice flush, you know, I'm not going to make, since it was bullish skewed strangle, I'm not going to make huge returns. I will have protected my account. I will have protected my capital. I may make 25 to 30%, you know, unless we go to like 95 or something crazy, or 90, 96, 95. I'm not saying that's. I mean, that's most likely not going to happen. I mean, it could happen, but my goal when Microsoft, when I put that on, was to play the bounce. And when I put that on, it was descending, but we were still about $2 higher than we were at the lows yesterday. Microsoft still closed 1% up, which is kind of interesting. So. I'm hoping for a 105. We did hit 104.50 right before close, but based on numbers now, I mean, it might be tough. It's gonna be tough. Ice Cooler, that's why I told you not to celebrate too early on the earnings plays. You can celebrate earnings plays once you have the cash in your account. Until you have the cash in your account, anything can happen. Anything can happen. As you can see right here now, puts are getting fried. Anyways, so my goal was for it to be above 105. It was kind of playing with that, but around 104.50 was having some troubles today. But I'm still looking for that bounce, but we'll see. I mean, we got the Fed tomorrow, and we'll see what happens. I feel like Microsoft could easily bounce to the 108, 106 to 108 area, but it really we got to be careful because this week's going to be a tough one. AMD, I placed AMD. It was a bearish strangle. So I have the 1950 put, the 2050 call, and really what I wanted to do there. I placed it for next week, so I got some time on it, was to kind of hedge against Microsoft and hedge against IBM for this. So it was a bearish skewed strangle, and the reason for that is on AMD, we ripped up at open, and we were really just chilling here. So I put the strangle on when we were just hanging out up here, and it kind of came down a little bit, and it closed lower than when I put it on. I mean, I'm down on this position $4. I'm currently in the money. Well, barely. Well, after hours, I'm out of the money. So the 1950 put was kind of hedged against Microsoft and IBM. When I have this many bullish positions on, especially in this type of market, I like to kind of, I'm not going to say trade in pairs, but hedge myself a little bit and figure out, if these bullish positions go against me, I would still like for a position to, balance me out or get some cash back into the account, that kind of thing. I don't ever like leaning one position all the time, even when, AMD can go to zero, and I'd be fine with that if Microsoft and IBM and Baba worked out. Now, however, the one thing that I will say about AMD in terms of, it's been kind of bearish since it hit 24. It's been having a descending pattern. But if you look on the flip side, it has been making higher lows here, and it's really just been consolidating right around the 20 area. So I mean, this could easily rip up to 22, 23, and I'd be making money there too. So we got a lot of time on that. So either way, I think I'm good. If we revisit 1850 tomorrow or this week, 1850 or $18, I'll probably take the trade off and then realign. IBM was a bullish trade today, and the one thing that I will say about IBM, we've been making some money on strangles. I have not made money on my December calls that I've had on for a while. If we're looking at IBM, let's see here. So we made some money on IBM back in October, and then we made some money in here on IBM in October, November, and then we made some more money. We started losing on IBM on these December 21st calls. So on the December 21st calls, if you look at this block here, December 21st is when we started losing on this. So we made some money down in here, but the December 21st calls, we placed some trades. We started losing on that, and then December 14th strangle, we made some money, and now I have a December 21st strangle. we're at $1.53. I have the 119 call, the 114 put, and the reason the reason why I put it, I was bullish on it because it was looking like Crypto Slice. What's up? Looking like we've bounced down in here before. We have hit 114.09 in the past, so I was thinking if we go back to 114, kind of like Microsoft, I'll get some money back. It won't be a big winner. Maybe it'll be scratch. Maybe I'll be up 20%, 30%. It won't be like 100% or 50% or anything like that. But I'll conserve my capital. I'll keep the cash in my account, and then we'll readjust. I'll take that trade off and then readjust. Sure, it can go to 112, 110 easily. Sure, but if I have a bullish strangle on and it goes against me on the put side and I'm break even, I'm most likely trying to get that money back versus having it rip up and then be a full loser. Because when you have a strangle and you get closer to expiration, you don't want it to end up in the middle. Whatever you do, you don't want it to end up in the middle. So that's why I take it off, and then I'll realign, readjust. But I'll have cash in my account to do so versus having a max loser on that position. So I had the 119 call, the 114 put on that, and really what I was looking for on IBM. It was holding this price pretty nice today, up until kind of like the rest of the market. It tapped 118 a couple times, kind of double topped up here, and then we just ripped down lower. So now this position is going against me. On this position, I'm down on this actual position. We're down. So we're down about $29 on the position. I paid $1.53, so not too bad. We could easily, Baron, what's up? We could easily come back from this, but right now, we could still have a run off to 119. As you can see, we hit 115 yesterday. We hit 118 today, so it had a nice $3 move. It could easily go from 116 to 119 or 120 or 122. But if we're gonna have a lot of bearish momentum, this could break down. This could easily break down to 114, 114. 114, 112 area, but if it comes down to 114, I'm break even or up a little bit, we'll come back. We'll readjust. Oh, here, ice cooler. Here you go. MU. It's fake. It's faking out. That's why if you're trading stocks, it's hard to trade earnings plays after hours. I still wouldn't celebrate. We have a long way till tomorrow's open, man. We have a long way. And then Alibaba, I was looking for a position on. I've been looking for a position on since Thursday. When was the last time I traded Alibaba? So last time I did it was December 13th or December 12th. I opened a position, and now it's what, December 18th. So December 18th. So it's been about a week since I've traded. So I've been trying to get back into there. I made some money on this trade. Not huge on my last trade here, but on Alibaba I opened a new trade for $1.70. So kind of right around where I placed my last strangle on. But I bought the 135 put, 146 call for this week on Alibaba. This again was a bullish strangle because after it ripped down today. After he ripped down today, it was kind of making a comeback and kind of just bouncing around. It was really flat until obviously, like we talked about with the rest of the market, we did rip down as well. So if you're looking at Baba was kind of the same as Microsoft. Really floating around, like it's bounced in this 140 area quite a few times in the past. But also it's also broken down below here back in end of October, it was around 140 when it failed all the way down to 130, so I think it's a good position. It's a good neutral position. Right now it's at 140. If this comes back up to higher to 150, which it can, but it could also go down to 130-ish area as well. So right now it's kind of too early to tell. That's why, like, when you're down on a position, after you put a trade on, I kind of like want it to simmer, let it sit a little bit before you try to adjust. Like I noticed that if you try to adjust a lot of times, you often get yourself into a worse situation than you were before. Right now, you know, we're down a couple bucks, sure. None of it's realized. Like today, anything was, you know, if you look at my column here, nothing was realized. Everything that I put on today. I didn't realize. I didn't take anything off. And you know, you don't want to over adjust. You kind of just want it to play out, because if tomorrow this opens at 146, that's a different story. Or if this opens up at 135 tomorrow, that's a completely different story. So you don't want to like over adjust and try to think about, you know, making too many adjustments, because you'll probably lose. You're going to end up paying more commissions, you know. So, Brian, how far do you think oil will get? Let's take a look. So if you're looking at oil, I think we have to go to the 5-year chart now. So in the last 5 years, back in 2016, it came all the way down to 26.05. Sure, I mean oil was $107 in 2014, came all the way down to 26. So right here, I mean it's kind of in the means. If you're looking at the long-term chart here, the 5-year chart, I mean, it could settle in right here for a few months and just kind of hang out at 46. However, I mean, if it does break, looks like if it does break below 40, you know, we're going down lower. You know, we got $6 to 40 here. You know, if you're looking at USO, kind of the same thing. You know, when oil hit a low, this hit a low of 767. So we got $2 left. However, I mean, it is kind of averaging out here where it's been most of the 2016, 2017, and then 2018 it really just started to take off, and then now it's paying it back. So it's really coming back into range. Eric, yeah, Eric, I was saying on Costco, we were saying on Costco the last couple of days is that 195, 200 area is support. After that, I mean, it's a little rough. You know, we're definitely would revisit like 175 to 185 range, back down here in Costco. Brian, I sure hope it doesn't recover too much for tomorrow. Yeah, I mean, the one thing that you have to be concerned about on oil is the politics and the news. You know, supply and demand. You know, are they going to cut supply? Are they going to cut production? Are people going to try to? I mean, Trump wants oil as low as possible. He's thinking ahead to the 2020 election. And it's going to be bragging rights when he says, hey, we got oil all the way down to, you know, $30 a barrel, $25 a barrel. When I started it was, I mean, how much was, when he started, let's see. How much was oil when he started? So when he started oil, well, oil was, let's say, like $50 a barrel. Let's just call it $50 a barrel. We're still there. If he brings it down to like 30 or even like 20, under 30, it's gonna be bragging rights for him. So that, I mean, just keep that in mind. Trump is doing everything he can to keep oil prices down. That's why he got mad at Saudi Arabia when they said they have a Saudis first policy, which I don't know why he got mad, because we have an America first policy. So, you know, they're just looking out for their own best interests, just like America is in pretty much every country. The stream is smooth sailing. Good to hear that, because I've been having some trouble. So before I started streaming, or when I was live streaming, I upgraded my Mac so I could live stream here. I bought a brand new Mac. However, I've been having some trouble with it. So because you're not able to use OBS, doesn't allow you to use all the resources in your computer when using open source software. So I'm thinking about buying another computer. to kind of improve my streaming. So when it gets like choppy and stuff, or my video kind of like lags, I'm well aware of it. I definitely apologize. So I'm working. I'm going to be getting another computer to fix that issue. My internet seems to be spotty. Is anyone else experiencing lag? I mean, FC, my YouTube is saying I'm good. Yeah, Greg, the U.S. is intentionally oversupplying the market. Doesn't a crude oil come out? Yes, Baron. Crude oil reports come out as well, and then that's what moves the price. But what also moves the price? What also moves the price is politics and policy and stuff like that. Yeah, I know. Ice cooler. It happens. Sometimes you just get so busy that, you know. Crypto Slice, MU, JP Morgan, SP. So yeah, I'm with you, Crypto, on that. The one thing that I will say is, I was looking at today, Square. I didn't put a position on because I put a bunch of other positions on, but this is I've been looking at this right here on Square, and it's kind of this. It's kind of the same chart. Kit, what's going on? If you look at Baba, Microsoft, and the trades that I've been making have all been kind of the same chart where it's been sitting at like support here, and Square is back in this range where it's bounced before in the past. You know, right around here. It's bounced back in here. However, I would say for Square, it's a lot less likely to bounce because I would say this is not really great support here. You know, if it breaks here, if this breaks right here, I mean, it's going to go to 45 pretty easily, 45 to 50 pretty easily. Don't say anything. He sells options. He's not a computer whiz. Easy. I also own an IT company. Just FYI. Anyways. But I was looking at this. This could be a good trade I was looking at for next week or later in this week. That if Square breaks below here, definitely could see a bunch of volatility. The one thing I will say right now, just like the rest of the market, if you're looking at the IV chart here, implied volatility is very high for Square as well. I don't know if they have earnings coming up. It doesn't say. So that's not why. So the reason why is because it's dropped from 75 down to 60. But options are really pricey right now, so there's a lot of risk in Square. But if it drops below here, people are probably thinking that it's gonna drop quick. So that was one other trade that I was looking at, but I did not place. The other thing that I was looking at today, before we start taking some questions here, was VIX. We talked about this. It's very range bound. I was looking at VIX, and the one thing that you have to be concerned about VIX if you do trade it is volume. If you're looking at the monthly options, anything without a W here is a monthly option, and anything without a W here is a monthly option. So if you're looking at December here, you can see we had some nice volume on the puts, nice volume on the calls. But if you get into the weekly options, be concerned. There's really no volume on these. You got some down in here, but that's kind of far out of the money. Most people buying these on the weeklies are just like lotto plays. And if you're looking at the bid and the ask, they're super wide. So if you can see, this is a lot of lotto plays, a lot of hedging for people. But I wouldn't trade these just because the bid and the ask is so wide. I mean, if you're looking at these weeklies on January 2nd, 13 days out, the 27 calls, I mean, that bid's 85 cents, the ask is $4.90, and there was zero volume today, and it's pretty close to in the money. And it's also within the expected range here. So just be mindful of that. But if you look at like January, 28 days out, there's some nice nice volume on these. Like all the calls were trading in like the thousands. The puts were also, except for in the money, the 30 puts were trading for over 1,000 a day. But out of the money puts were trading. This one had 45,000. The 20 strike 45,000. 21 is 3,000. So I was actually looking at VIX in terms of balancing out my portfolio. I was looking to do because I was more bullish on a portfolio, I was going to do more of a bullish strangle on VIX, because if we really break out of this range here, this could really go up to like 30 or 40, even 50 as it did in the past if things get kind of out of control. So I was looking at yesterday we were at the top end of the range. Today we still, even though we were green for part of the day, we still closed out at the top of the range here. And if you're looking at VIX, it didn't really go down today at all. I mean, even when we gapped up this morning, it was still staying pretty high. It wasn't really selling off or anything like that. So I was actually looking at like the 30 call, and then like the 18 or like the 28, probably more like the 28, and then the 18 put, 28 call and the 18 put. I was looking at that. So there goes MU support is down at 29.50. So let's look at MU, and then let's analyze Ice Cooler. Let's take a look at your position. What's your actual position on MU? Give me the strike, give me the expiration date, and let me know if it's call or put. Oh, well, I guess it's the put, because we already said that. But let me know what your actual position is. Elixir, what's going on? So let's analyze, but if we're looking at MU, just going into support. And then Ice Cooler, let's see, let's see what your position will be worth. Tell me how much you paid for it. Give me your expiration and strike. But if we're looking at MU, definitely was getting dicey, just like the rest of the market. Now, I'm not calling you out. I just want to analyze your trade. I want to see if you're going to win. I want to see if you're going to win. Let's see here. So 34.11 it closed at. We're currently at 32.14. So we're down about $2. But yeah, I agree with who said 29.50 was support. Ray Lee. Yeah, 29.50 looks like okay support. If it breaks through 29.50, easily 26, low 26s. Alex, MU coming into some great demand zone around 29.50 to 30.50. Yeah. But like I said, like a lot of times when earnings move a lot, you can see like when the market opens again, I think at like 3 a.m. Central, 4 a.m. Central Eastern time, we can get like a slow trickle back up to break even. You can go to bed, it'll be like $31. You wake back up and it's at like 33.50 or 34. So, just be mindful. So he's got the 33.50 December 28th. Okay. And how much did you pay? So he has 33.50s. And right now it's 32. Let's see. All right, 33.50. Just getting all this set up to see if we can analyze this trade here a little bit. Okay, for $1.08 at closed at $1.28, hit a low of 99 cents. on Monday. So today they hit a low of like $1. So you actually, Ice Cooler, you hit the lows pretty good. It was hitting between $1 and $1.10 today at the lows. So you did pretty nice on that execution. Paid $1 for it. So if it opens, let's say around here at $32, what was Theta was 1. So you're gonna be probably, if it opens at $32, you're gonna be up $1.50, $1, anywhere between like $1, $1.25 probably. So $100 per option, I would say, give or take, depending on volatility, if it expands or decreases. I mean, IV is gonna get crushed a little bit, so you're gonna take a hit there, but you're gonna be in the money, so it's not gonna hurt as bad. So if it opens up like $31, you'll be up around $2 per contract. So as long as you're more deep in the money, like you have the 3350s, as long as you're more deep in the money, you should be good. You should be good. If you had like the 32, if it opened up at like 32 and you had the 32 put, you would definitely be feeling the theta burn on that one and the IV crush. It would definitely hurt tomorrow. But it's not going to hurt that bad because also tomorrow is Wednesday. Thankfully, tomorrow's not Friday. If tomorrow was Friday, you'd feel it even more. Oh man, you went big on the earnings trade. You must have a pretty large account to gamble 1,000. But hope it works out for you, man. If we open around 32, 31, you'll be making $1 to $2 a trade. But that's a big trade. I don't like, for me personally, I definitely don't recommend going that big. I typically trade, if I trade earnings, I'm trading like 1 contract, 2 contracts at the most. But then again, I don't ever gamble in the market, so you got to be careful. Yes, it's going to be a big win, but the risk it's going to be a big win if it opens down around here, but the risk you assumed, you had to assume that the possibility of it going to 0. So if you were comfortable with that, then it's going to work out. But the way that you're going to feel though in the future, you just got to be careful, because in the future you're going to do it again and say, okay, well, instead of making $1,000, I could probably make $2,000. I'll put $2,000 in the market. Oh, I made and then let's say you win, and you keep doing that. Eventually, if you keep doing that and consistently, eventually there's going to be an earnings play that's going to steal all your money. You're going to lose all that profit from your past play. So just be careful about that. You got to be careful. I have 10 GS 200 calls. Shotgun. Yeah, somebody else was asking about banks as well. I saw the question. Sorry, I didn't mean to ignore you. But yeah, let's talk about the banks. Because I currently have a position on Bank of America. So you have 10 GS 200 calls. I mean, unless a miracle happens, and I would say that this drop from 230 down to 171, and it's down $100 since last March. The market, anything could happen, and nobody would have. If you would have told me back down in here, or anybody back down in here, or even when it was like 230, if you were gonna say, hey, in like 3-6 months, GS is gonna be touching 160s, 170s, nobody would have called that. Nobody would have called that. And now here we are. And so I'm not saying that can't happen. So it did touch 200 back in 3 weeks ago. However, I feel like you don't have enough time for it to bounce. If it does bounce, if we get a solid bounce here, it could come back up to 200. But I feel like it did take about 3 weeks for it to get down from 200 down to 170. So I feel like it could bounce, but I don't think obviously this is my opinion. I mean, some news could come out. This could go to 200 tomorrow. So I don't want to say it can't happen, but the likelihood of it happening is not good. One thing that was interesting today as well, Bank of America literally closed. If you look at my stocks here, Bank of America literally closed at 0. It went nowhere. And if you're looking at Bank of America, it was a lot of drama. I mean, it ripped up all up to 25.10. If you guys aren't familiar with my position, I have 10 days out. I have the 24.50 put, 25 call, and really I'm down 14 in that position because it's been going between 24.50 and 25 since I put the position on, which is rather frustrating. But if you're looking at BAC, when did I put this on? Okay, so I put this on a week ago, and really it's still the same price. That's why I'm down $14 in that position, because it's pretty much the same price for where I put it on at, and Theta has just been taking that money. I'm not down big, but at the same time, you don't want to have those kind of positions in your portfolio where it just stays the same and then you just bleed out the cash. So, the one thing I will say, I mean, if you're looking over the last week, I mean, pretty much stayed the same. However, there's been a lot of drama, so it's been very good for if you're day trading this. If you're day trading this, buying the dips and then selling the rips, shorting the tops and shorting the rips is also good. But in terms of my position for leaving it on, really has gone nowhere. So Theta's really been taking that, and BAC could really go either way. It was looking like it was wanting to stop. But unlike GS, GS is continuing to go down. Bank of America is not. So even though when Goldman Sachs a couple days ago was having 3% down days, 2% down days, Bank of America even closed green a couple of those days, or was flat, and today just closed at 0. So I'm not really sure where Bank of America wants to go. Does it want to bounce, or is it just preparing for its next leg lower? I mean, we had a nice drop here from 29 down to 24. But since then, it's kind of what happens is it's digesting and trying to think about what it wants to do. Is it preparing for that next leg lower, or is it going to actually rip back up? And I would say the likelihood of it ripping back up is probably not good due to current market conditions. So I would say being bullish on banks right now is a very difficult position for most people. Very few people were ready for how bad things got in October, yeah. So FC saying very few people were ready for how bad things got in October, and I would say that's completely true. Especially like back in February, nobody was prepared for this drop in February either. And that's why I always say, have enough cash in your account where you could take advantage of moves and also play defense. If your account is 100% in the market at any given time, you're leaving yourself prone to getting your entire account wiped out, because if people are gonna if people in January, if you were going to tell them the market was going to crash in February, they would never believe you, and they were going up every day in January, and then it just dropped. It just stopped one day. One day it just stopped. Everyone was making money hand over fist, and then one day it stopped, and the bears were getting paid. However, the bears didn't get paid that much because the bears were getting eaten alive in 2017. They kept shorting, and it wasn't working. And then they finally get paid, but it wasn't enough to kind of recoup all their losses. And now they're starting to get paid again. So keep in mind the rotation of the market. If it goes up for too long, it's going to come down eventually. If it goes down for too long, it's going to come up eventually. Just be very mindful. That's why, I'm not really bearish or bullish. I just trade how I see it. Obviously, I want America to do well. I want Americans to do well, but at the same time, the stock market. I mean, I've said this many times in the last week or so. The stock market. It's not possible for it to go up every single day. It's not possible. I mean, I want to buy JPM calls, just too afraid. I agree with you. Yeah, right now it's about being disciplined and really pinpointing specific positions instead of getting in a lot of positions. really trading what are the good setups, what charts look the best, and really pick 1 to 3, you know, instead of having 10 to 12 positions on. BC will make a move soon. Alex, BC been treating me good. I agree. It's just been kind of chilling the last few days, which is fine. October was crazy. When I first started option trading, I was down almost 4,000. Woo! Well, hope you get some of that back tomorrow. But I feel like the way that you got it back wasn't really trading. If you feel me. Not to call you out, but I bet Buffett and people trading for him hedging his positions. I mean, yeah. I mean, when you're the size of Buffett, you are taking advantage and protecting your accounts. I mean, that's just like anybody else. Like when we play defense and we protect our account, we protect our capital. They're thinking the same way. You know, it's the same mindset. Is okay. The market's going to go down, and let's say, you know, let's be honest. Let's say the market decides to go down for the next 3 years. You think Buffett's going to want to lose money for the next 3 years? And I'm not talking about realized. I mean, it'll be unrealized, sure. But do you think he would take advantage of the opportunity if it's going down for the next 3 years? Greg, no volume on JP Morgan. Greg, it looks like there's decent volume on the weeklies. Next week you get into, I mean, some strikes have volume, but it's kind of sparse. Let's see about the monthlies. Monthlies aren't bad. Monthlies aren't bad if you're going to trade JP Morgan. So I mean, there's liquidity on these options. You just got to be careful. Some of the weeklies here, some of the weeklies don't have very. I agree with you, Greg. Some of the weeklies don't have great volume, but the monthlies are pretty good. This week also the monthlies, and I think I can't remember if we're going to have a triple witching or quad witching week, but that's when multiple trading products expire on the same day, and on the third Friday of every month, the monthly options expire, and we're coming up on that this week. Drupka, what's going on? Billy bearish on Target. Yeah, Target's back. I mean, they had a pretty crazy year. I actually own some Target stock, which I bought down in March, down here in the 60s, and I sold it when it was in the 80s. Guess I'm glad about that now on Target. But yeah, I mean, we're almost at 52-week lows here. And if that breaks down, easily 55. The one thing I don't really like about Target, it just moves really slow. But yeah, it's not looking good. Easily 55. But yeah, I mean, I might actually. Thanks for bringing that up. I haven't traded. I traded Target a little bit over the summer, but I haven't traded it recently. But might have to look back into that. The one thing I will say about Target though is you just have to give it some time because it could turn sideways for a while. For shippers, FedEx. So for shipping companies, mainly I trade. If I trade shipping companies, it's mostly FedEx and UPS. Target, KSS. Is Kohl's in the same boat? Yeah, Kohl's is the one thing I will say. Their chart looks better. Kohl's chart looks better. Because it's just coming back into range here. Unlike Target's hitting 52-week lows, and that where it's at right now at like 65 is not a very good support. Unlike Kohl's, it consolidated here in the 60 range for 1, 2, like 3, 4 months here. So you know, just that, I would say that's the difference between, I wouldn't consider Kohl's and Target the same. Just because you're short Target doesn't mean you should short Kohl's. Obviously, you got to look at their charts and kind of see what's going on with it. Options have allowed me to make up most of my losses in October. Steve, I'm glad that you're able to get your money back. That's always nice. Yeah, I mean, options are the most flexible trading product. I mean, people can argue, but the things that we do with options, you can't do with penny stocks. You can't do with regular stocks. You can't do with regular other investing products. With options, you can do almost anything and apply a range of different strategies, and also you could also be very creative about your positions and also adjust your positions as well. I mean, like if you're like in the regular stock market, if you're short like a penny stock, what kind of defense can you do? Just average down your short, or you know what, you know, but you get the idea. You know, options cause it, instead of being in a 50-50 game, options allow you to increase your probability of profit, or the amount of times you're able to profit. So you're able to get that higher. MU is still at support. Would you recommend buying puts at open? So MU, I'm actually going to be looking at open to trade MU after earnings, just because. What was the expected move for MU actually for earnings? Okay, so the expected move was $2.89, and so it was expecting like a 7 to 8% move, and it's dropped about $2.50. So it's still within the expected move, and that's the other thing you're gonna get in a little trouble. So I would definitely, depending on where it's at, I mean, definitely where we open, if we're looking bullish or bearish. I mean, obviously we're gonna be, if it opens up around here, we're gonna be at a new 52-week low for MU, and that would definitely be bearish. And there's really no support here. The one thing that you got to be careful about MU is that there's going to be buyers wanting to come in and thinking they're going to get a good deal at open. So that's why you kind of have to let the dust settle a little bit and then strike. You don't want to just go in cold, because one thing is you're going to overpay for options going in right at open. You're going to overpay for options because the IV crush may not have happened yet. You got to wait for the IV crush and then kind of figure out which direction it wants to go, or which direction you want to take it, and then put your position on. Yeah, with the options, you can be directionally wrong and play defense and end up profiting or making scratch. Defense is the best offense in a long-term game. Kid, I'm with you. Shirley, what's going on? What do you think of SRUT? Easy. Are you talking about SRPT? There's no SRUT. We're talking about some penny stock or something. TSU. Let's see here. Shirley, TSU. So for trading options on this, you'll probably just want to mainly just stick with the stocks, because there's no liquidity on these options here for TSU. There's no volume. Steve, take care, man. There's no volume here. I mean, the chart looks like it could be breaking out here, but it needs to bust through 17 before it makes some long-term moves here. But there's no liquidity on the options. S&P 500 utilities. Let's see here. It's not coming up. SRUT. I don't think I've traded that before. If we go to, these are all the ones here for the S&P 500 utilities that are popping up. You know, there's water utilities. You know, there's a lot of different products that you could trade here, but I'm not seeing it. All right, guys, we got about 5 minutes left. Anything else you want to look at before we sign off here today? I know we covered a lot of ground today. You know, while you guys are thinking about that, let's go back to the S&Ps. And if we're looking at the S&Ps for today, you know, like I was saying, the bears are piling it on. Yes, we had some strong buying into the close, which now, I mean, now at close, Dow is down 109, S&Ps are down 23, Nasdaq down 27, and as you can see, like Microsoft is lower, BABA is lower. You know, I'm not saying that's where we're going to open up, but the trend is continuing where the pops are getting sold off pretty easily. And here, after it hit 25.55, just really broke down. And if we're going to the long-term chart here, you know, we just hit. We're below the lows that we touched in February on the S&P. You know, where we touched today, we touched 25.28. You know, under 2,500, I mean, 2,300 to 2,400 is not out of the question. You know, we had a nice run from 2,500 up to 2,940 this year, but we're not in a good place, which we've been talking about. And now, like I was saying, we kept bouncing at 2,600, we kept bouncing at 2,600, and now we are now closing below 2,600. So be mindful of that. Be mindful of your positions. Yes. I'm not saying like I put on 3 bullish positions today, but it doesn't mean that you should be full bullish. Just keep it in mind, keep it in the back of your mind that anything could happen in the market. You know, Cron. Yeah, I mean this is Cron is kind of just chilling as well. It's had some nice rip ups, but the options are really overpriced, I feel. So, anyway, guys, you guys have a great rest of your evening. I'll be on tomorrow. Actually, tomorrow I will not be live streaming. I actually have to go to the doctor all afternoon. But I will have video content for you. I just want to repeat, I will not be live streaming tomorrow. I got to go to the doctor, but we will still be doing trades. I'll be posting my trades on Facebook and in Discord. So. If the video was of value to you, hit the like button below. Definitely appreciate everyone for coming out today, watching it. Richard, Shotgun, thank you so much for your donations today. Really appreciate it. It means a lot. Have a great rest of your day.